You ever get the feeling that like global events,
Hmm.
things like trade wars are kind of happening in some like far off world and don't really affect you?
Hmm.
Well, think again.
Yeah.
What if I told you that tariffs could actually like squeeze your business's finances,
Right.
even if you aren't directly, importing or exporting goods?
Yeah.
It's all about the ripple effect.
Totally.
So today, we're going to unpack how something like a trade war can really impact you. And we're also going to explore a potential solution that you might not have heard of before, factoring.
Okay, cool.
Now, before we dive in, let's define a trade war.
Hmm.
Essentially, it's when countries slap tariffs or taxes on each other's goods,
Hmm.
which drives up prices. And that can make things pretty tough for businesses, especially when it comes to managing cash flow.
Yeah, for sure.
That's where factoring comes in. It's like a financial tool that can help businesses unlock the cash tied up in their outstanding invoices.
Interesting.
And get this, it's available even for businesses facing some financial hurdles. That's what I found really fascinating in the research for this deep dive.
Yeah, so I think what's interesting here is that trade wars can create a chain reaction.
Okay?
Let's say your business relies on a certain type of imported material.
Right.
And suddenly, because of tariffs, that material becomes way more expensive.
Mm-hmm.
You might be able to pass some of that cost on to your customers, but in a competitive market, that's not always possible.
Yeah.
So you're stuck absorbing the extra cost, which directly impacts your cash on hand.
Right. And factoring expert Chris Lands really drives home that point about the impact on cash flow. He says that for many businesses, especially smaller ones, even a small disruption in cash flow can have huge consequences.
For sure.
It can mean delaying investments, struggling to pay payroll, or even having to turn down new opportunities.
Exactly. And that's where factoring comes in. Instead of waiting for your customers to pay their invoices, which could take weeks or even months, a factoring company can advance you a portion of that money right away. They basically buy your invoices at a discount, giving you instant access to funds.
Now, this is where it gets really intriguing. Lehnes mentions that factoring can be a lifeline even for businesses that are struggling financially, perhaps experiencing losses or dealing with bad credit.
Interesting.
This is where traditional lenders like banks often hesitate, making factoring a unique and potentially game-changing option.
Absolutely. There are different types of factoring, such as recourse and non-recourse.
Okay.
In recourse factoring, the business, are ultimately responsible if your customer doesn't pay the invoice. Non-recourse factoring, on the other hand, shifts that risk to the factoring company. Each type has its own cost structure and implications, so it's crucial to choose the right one based on your specific needs and risk tolerance.
So even if a company is hit by tariffs, maybe facing losses because of it, factoring could provide the breathing room to adapt.
Yeah.
They could explore new suppliers, pivot their product line, or even expand into new markets, all things that require capital.
Precisely. And think about the speed Lanes mentions, getting funding in about a week.
Yeah.
Wow.
That kind of agility can make all the difference for a business under pressure.
So beyond trade wars, what other situations might make factoring a smart move for a business owner?
Well, imagine a business experiencing rapid growth.
Okay.
They're landing new clients, but their cash flow hasn't caught up yet. Factoring can bridge that gap, allowing them to fulfill orders, hire staff, and keep pace with demand. Or think about seasonal businesses.
Right.
They might have a huge influx of orders during certain times of the year, putting a strain on their working capital. Factoring can help them smooth out those peaks and valleys.
That's a great point. However, wouldn't relying on factoring long-term potentially mask underlying profitability issues in a business?
That's a valid concern. Factoring should be a strategic tool, not a crutch.
Okay.
If a business is consistently relying on factoring to cover basic expenses, it's a sign that there might be deeper financial problems to address.
Right.
Perhaps they need to revisit their pricing strategy, tighten up their expense management, or explore other avenues for improving profitability. So to sum up, factoring can be a valuable tool for businesses facing a variety of challenges, from navigating the choppy waters of a trade war to managing rapid growth or seasonal demand fluctuations. It offers quick access to cash flexibility and even a willingness to work with businesses that might not qualify for traditional financing.
Yeah, and I think the rise of alternative financing options like factoring is a fascinating trend. It tells us a lot about how business is evolving in our fast-paced, globalized world where agility and access to capital can be the deciding factors in success or failure.
And here's a final thought for you. If the economic landscape is indeed shifting, as we've been discussing what other innovative financing models might emerge in the future, What does this mean for the traditional relationship between businesses and financial institutions? Something to ponder.
Yeah, definitely something to think about.